Chat. We are back. Let's go ahead and get rocking and rolling. Let's go ahead and drag this over here. All right, y'all. Welcome back. Let's go ahead and confirm that we are live right now. What's good? Welcome in, everybody. Welcome. Perfect. What's going on, y'all? Welcome in. All right, cool. Today, we got another live of us talking about options trading, okay? Obviously, right? So let's go ahead and just jump straight into things, all right? So let's go ahead and take a look at how we closed out the week on SPY. So I kind of want to first check here. So one of the things that I kind of noticed with SPY is that although we've been kind of on this upward trend here, let me just make sure you guys can see this. Okay, perfect. So we've kind of been on this resilient upward trend. And one of the things with trading is kind of understanding the types of markets that you're in, and where you could potentially fall back to. So this 618 level is a pretty clear level of support. 632 is going to also be another clear level of support. We had a break of structure up here, so we're going to go ahead and mark out this level here as well. And then another recent level of support is up here at 654. So every time that the market pulled back, we ended up getting bought right back up. And the interesting thing when it comes to the market is how resilient we've really been and where price can really go. So any person who says, "Oh, I know where the market's gonna go" and all that stuff, no one actually knows where we are gonna go in the market. To be completely honest with you guys, like right now, this has been one of the craziest times, to date, as far as I know. Of just a complete run, right? So let's go ahead and mark our daily VWAP. So this is how I mark off my chart. And the reason I mark it out like this is because I need to know clear levels. And something that has been helping me a ton is just, being mindful of my levels, marking everything out and just being mindful of where price can go. So, a lot of these blue lines, right, literally they're just support and resistance. So if you guys are new to how I trade, or if you guys are just coming back, say what's up in the chat real quick. I just want to make sure everyone can hear me. Everything sounds good. Make sure we don't have no errors with it live. A lot of how I trade, which is smart money concepts, a lot of it focuses around levels and like very important places where the market is at. What's up, Seb? Yo, what's up? XCII was good. Welcome in, guys. Welcome in. All right. A lot of how I trade. What's up, Ishmael? A lot of how I trade relies on these levels. So understanding these levels, like during the weekend, if you guys are traders, right, during the weekend you want to go ahead and just mark out everything on your watch list. So this is literally what I just did now. What I'll also do is I'll go up to the weekly time frame and kind of see where we left off at on the weekly time frame. So I'm going to actually mark this as my weekly VWAP because this is another level of support down here. So these are my support and resistance. So SPY is really close to all-time highs. Once again, we've been kind of breaking out. As soon as we break out, we sell off a little bit, some profit taking, then it gets bought right back up. So as of right now, 665 is the level that we kind of got to watch this upcoming week. On the daily time frame, like I said, you're seeing this just immediate uptrend that has been, absolutely resilient. But what interests me right now is I don't think people really are looking at the type of economy that we're currently in. I mean, I don't know if we've ever been in a scenario like this, but number one, there are more people looking for jobs than there are jobs available, right? And I talked about this recently to my group where although you're seeing a lot of layoffs, I still don't think the real wave of layoffs have came yet, right? Like I don't think we really seen the true significance of AI just yet. Like I think when I would say in the next 2 to 3 years or even 5 years, when these data centers are up and running, I think that's when you guys are going to start seeing insane, massive layoffs. Which, when you think about it, if people can't get a job, right? Obviously, rent, cars, things like this are going to be a lot more expensive. Yo, Sahara, thank you for the badge. Appreciate you. Yo, if you guys are in here right now, spam the like button. Spam it. Let's get to let's see if we can get to 10K likes. 10K likes. At 10K likes, I'll give you guys my favorite trades of the week. I already pretty much charted out my entire watch list already. So I'll just give you guys a couple free plays that y'all can take this week. I got a few absolute bangers. It's probably a couple of them I'm only going to share with my group, but I got some other ones that y'all could go crazy with too. So got to gatekeep just a little bit. Electric, thank you for the badges. Antoine or Quan, thank you for the badge. Thank you guys so much. I really appreciate it. Shout out to everybody with the follows as well. Really means a lot. If the audio sounds good, guys, let me know. I had to switch the audio. Let me know if the audio is good, guys. Just drop a yeah in the chat if it is. Okay, thank you, Sahara. Shout out to Sahara. She's been ride or die, locked in with us, locked in. But like I was saying, we're in an interesting part of the economy where, like I said, jobs. There's like literally one or two sectors that is literally pushing the entire market up, which is obviously AI and tech and just the whole infrastructure of tech and, you know, AI. And it's interesting because the US credit deficit is so high. It's like we're creating a bubble, right? And I think people don't do enough due diligence. This is why I always talk about, you gotta go through the articles. You gotta go read this stuff because it's gonna be pretty hard for you to understand trading if you don't understand the catalyst or the important moments in the economy. And this is something that I've talked about for a while now, where like people try to trade to make money. When in reality, you need to understand how our economy makes money and what could affect us making money as an economy. Then from there, you will be able to be a better trader. Does that make sense? Affluent was good. What's going on, brother? Thoughts of Nike and TTD? I haven't taken a look at either of them. But does that make sense? Like people want to trade and make money in the market, but they don't understand how our economy makes money. And without you understanding how companies make money, what products they're selling, what key things they're doing in their company that will allow them to make more money, you're just kind of like looking at a chart and just relying solely on the chart. Now, granted, a chart, just looking at a chart, it can take you a long way. But that's why there's fundamental analysis and there's technical analysis. If you want to be the best trader you can possibly be, you have to do both of them. Doing one without the other is just you're going into a fight without all the advantages. Yeah, I'm guilty for solely technical analysis. It's you know, it happens a lot, you know what I mean? But this is why, you know, I try to give y'all articles, and like when y'all come to these streams, I try to give y'all resources that I personally use. So like in the morning time during your pre-market, right? CNBC is a great place to go get updated on the market. So what you want to do is on CNBC, you want to go to like the top 3 to 7 articles and just read through all of them. Sometimes they'll have the videos that you can watch. The videos are anywhere from like 2 to 5 minutes long. You can put them on 1.5x. That's another hack. All right, I'm gonna give y'all a hack. When you're watching videos, either on YouTube or articles or the news or things like that, y'all know how at the settings, let me know if y'all know this, but like on a video, you can click the like little settings on the bottom right corner. You can click it and you can put the speed, the playback speed at 1.5x. This will save you so much time and get through a lot of fluff. It doesn't even make sense. Like I've been able to consume more information more accurately by doing something like this. So if you're always watching videos on just 1x, try to go up to like 1.5x or even 2x, because the level of information that you're gonna get is just gonna be a little bit quicker and you're gonna save some time. Even if it saves you 2-3 minutes, you know what I'm saying? Like most people will be like, oh, that's not a lot of time. To me, saving a few minutes here and there on every video that I watch, that shit adds up. Because at the end of the day, like your time is the most important thing that you have right now. So if you can learn faster, it will make you more efficient. Make sense? Let me know in the chat if that makes sense. All right, cool. So back to the market, right? So like I said, the market is kind of in an iffy spot going into this upcoming week. If we take a look at the weekly time frame here, you know, 665 is a level that we need to break through. The market kind of is just, like I said, has been absolutely resilient, right? Every dip has been being bought up, and it's kind of interesting to kind of see overall, you know, even with IWM, which is the Russell 2000, right? If you come over here and you look here on the daily time frame, I mean, we just recently broke all-time highs on IWM. So how many of you guys are like newer traders, or you guys have like smaller accounts? Comment me down below. If you are a little bit newer, or you're just getting into trading, or your account is just a little bit smaller, I would say an account under like maybe $2,000. Comment me down below. Trading prop firms, I'm pretty new. Me. 3,500. That's not, I mean, I guess it's a $3,500. I wouldn't consider it a small account. A small account to me is probably like maybe under like 2,500, maybe 2K. A smaller account. There's different ranges of how you could consider it, right? So here's the thing, okay? So if you guys are a little bit newer, or your account size is less than 2,500, I would recommend that you guys check out trading IWM if you trade options. If you have a prop firm, like if you do prop firms and stuff like that, this doesn't really matter as much to you. I got $39,000 cash. I have no investments. What should I do? Do due diligence first. I would spend like, if I were you, I would spend like $5,000 on just information, like courses, maybe trying to find a mentor. That's what I did when I had a lump sum of money. I just spent a bunch of it to learn, so that way you don't spend the money learning and then lose more money, if that makes sense. So I just try to cut down my ignorance of what I know and what I don't know. That's just me though. Not everyone does that, but you know, that's how I've been able to like elevate my finances at a very expedited rate for my age, at least. So IWM, if you guys have a smaller account, is definitely one of those things that you guys want to trade more often. Let's see, do you guys want me to open up an options chain? I don't think I've ever broken down the options chain to you guys before. Would you guys like me to like break down contracts, how to trade these contracts, what contracts you should be using, things that I look at before I choose my contracts? If you guys don't understand how to choose the right contracts, you are absolutely like killing yourself when you're trading. So do you guys want me to open up an options chain? Yes. Let me see if I can actually open it up on my computer. I want to do this on Webull, but I'll have to log in. Oh, never mind. Okay, so I do have a test account. Okay, cool. Oh my gosh, I gotta log back in. Hold on, no. Let me see if I can use this. Okay, perfect. This is actually perfect. Okay, let's go ahead and move this over to about right here, and then we'll install that later. Okay, can everybody see the options chain here? Comment yes down below if you guys can see the options chain. I missed the beginning, just wanted to know today's itinerary for your gems intended to share today. First, we're gonna go over the options chain. If you're an options trader, this is huge. We're gonna break down like how I find my contracts, what I look for, and really just try to connect the dots for a lot of you. Now, if you're in here and you are a little bit more experienced, you've lost a few $1,000s with trading, you're looking for a more consistent strategy or someone who actually knows what they're doing. I have a live trading workshop tomorrow at 7 p.m. Eastern. We currently have 1,100 registrants. However, only 1,000 people can actually join the Zoom call because there's a restriction on Zoom of how many people I can have in there. If you're interested, if you have a 9 to 5 or a few $1,000s liquid and you're interested in coming to this live workshop, it's going to be a private Zoom call. You can click this yellow button right here. If you guys are on TikTok, you can go ahead and put your information in there and I'll send you the link to your email and your phone number tomorrow before the class. It's going to be 7 p.m. Eastern. Okay. So you can go ahead and click that right there. All right. And then if you guys are on YouTube, I have to drop the link for you guys in YouTube. I'm gonna drop it in the chat for you guys that are on YouTube. So people on YouTube, I just dropped it in the chat for you guys. You guys can copy and paste that. Actually, I just sent the wrong link. 1 second. /workshop. All right, there's the link right there, guys. Okay. Yep, and the link is right there. If you can't see, like, y'all should be able to see this yellow button with an arrow. Just comment and let me know if you guys can't see it. And then people on YouTube, you guys are good. So, sorry, just had to quickly say that. Let's go ahead and talk about the options chain, okay? So, if you are trading options, right, what we'll do is we'll actually look at IWM. And we can take a look at the prices of the contracts. Let's do IWM. And we're going to talk about this, okay? We're going to talk about this. So this is going to be very, very essential for a lot of you who are in here, okay? So when you guys are trading options, one of the most important things that you can do is choose the best contracts possible, right? Or choose contracts that will allow you to make money. So there's been times where I've noticed people are taking the right trades, but you're buying the wrong contracts. And then when the trade doesn't work out in your favor at the speed that it would need to, depending on the expiration of your contract, it goes against you. So let's talk about options contracts now, right? If you guys don't know much about options contracts, we're gonna break it down, okay? Let's go ahead and take a sip of coffee real quick before I start explaining this. Okay. All right, y'all ready? Let me get a hell yeah in the chat, or let me just get a yes in the chat if you guys are ready. Let me get 50 yeses in the chat. On TikTok, we got 174 people in the live. I think we can get 50 yeses, right? Soon as I see it say 50 yeses, I'll start talking about it. Siobhan, we're talking about the options contracts. How far out you consider called leaps. We can talk about that too, Adam. We'll talk about leaps as well. Now that you bring it up, just remind me if I get to talking too much, just say, hey, don't forget about leaps, okay? Let me get 50 yeses in the chat, 50 yeses. Okay, let's rock out. I see y'all YouTube. Shout out to all my people. Shout out to Joshua. Siobhan, what's up? Mr. Fourth Quarter, what's up? Okay, he said 50 yeses. You funny. All right, so let's talk about options contracts. So options trading is a little bit more different than futures and Forex and things like that. And most people think it's more complicated because there's more to do with options trading. And I agree, there is more to do with it, but I think the reason that people like options trading so much is because of the multiples. Now, what do I mean by the multiples? I mean that there's times where you can take a contract that is very cheap, you can take a very, very small account and grow it into a significant amount of money. And this is happening on an everyday basis because of the multiples, because of how a stock moves and where the contracts are at. And I'm going to explain that in just a second. So if you don't know what an options contract is, an options contract is like an agreement. It gives you the right, but not the obligation to be able to manage a contract, right? So let's just say this is our contract, okay? And let's say we're talking about the company Amazon, right? So this options contract says that, you know, within this contract, you can manage 100 shares of Amazon at a specific price, right? For a certain duration. So this contract expires. Any options contract you ever buy has an expiration date, meaning it expires, it goes worthless, right? Do we understand this so far? This options contract is giving you the right to manage 100 shares, right? Just on this contract. Drop a yes in the chat if we're making sense so far, okay? Now, you don't have to own 100 shares. You're just managing 100 shares. You can basically go take these shares, this contract, and sell it to somebody else, right? And then they can manage the 100 shares, and then they can go sell it to somebody else, and then that person manages the 100 shares, and then so on and so forth. Okay? Making sense? I need y'all to be engaged this time because I need to make sure this makes sense. This will drastically help you if you pay attention and you just stay engaged. Okay? So drop a yes in the chat if this is making sense. Okay? So an options chain is basically like Chick-fil-A menu, right? Think of it like that, right? It's like a Chick-fil-A menu. It's like, this is the place that I go to order, right? Whether it's food or whatnot, right? But this is where you're gonna go to order your options contracts. This is where you're gonna go to buy your options contracts, okay? So this is gonna look a little bit different depending on the platform that you're using. Brokerages that you can use is Robinhood, you can use Webull, you can use TD Ameritrade, Thinkorswim, you can use E-Trade, okay? You can use any of these platforms. If you're a beginner, what platforms would I recommend, right? Just my opinion. Robinhood is gonna be the most beginner friendly, okay? It's gonna be the easiest to be able to navigate. However, Webull is gonna be the one that after you start getting some trades and you know what you're doing, you lose a little bit of money, you make a little bit of money, you'll realize that, hey, I need to use Webull because it's better with contracts getting bought and filled. And we're gonna explain contracts being filled in just a second, okay? But first, let's talk about the options chain, This is what this is called. So what you guys are seeing right here is basically a menu of options, and we'll go down each row and explain everything that is in this, okay? So first off, this is the strike price, okay? What exactly is the strike price? Well, the strike price, right, is the price that you're betting that the stock will get to. So if you're brand new to options trading, okay, there's two different types of contracts that you can buy. There's calls and there's puts. So if I want to buy calls, I'm betting that the stock goes up. So think of calls, like when you make a call, your hand is like this. Like whenever we on the phone, right? Your hand is like this, it's pointing up, right? So think of whenever someone says, hey, I'm buying calls, they're basically saying, hey, I'm betting that the stock is going to go up. Always remember, your hand for calls is like this and it points up, okay? Does that make sense? Drop a yes in the chat if y'all still tracking me. Okay. Next is going to be puts. So puts is basically betting on the stock to go down. So think of putting the phone down. I am putting the phone down. I am betting that the stock is going to go down. So this is the premise of options trading, right? You're either betting that the stock goes up or you're betting that the stock goes down. Now, there's other factors to it, okay? There's other factors to it. Like, where do you think the price is going to go? If you're betting on it to go up, where do you think it's going to go? Right? If you're betting on it to go down, what price do you think it's going to go to? And that's what a strike price is. It's basically saying, hey, this is where I think it's going to go. This is where I think it's going to be at by this specific date. Okay? So the strike price, again, hey, I'm betting that the stock is going to go up to, let's say, $245. Okay? So we understand the strike price. Okay? We also understand that every options contract has an expiration date. So basically, when you buy this contract, right, there's different dates on here. So there's, right now we're looking at the ticker IWM. This is great for small accounts. If you have a account under about $1,000 or $2,000, you can get really, really good contracts for very cheap. You can make trades with literally $20 to $30, okay? Amazing. So these are different expiration dates, right? So let's go ahead and move this over a tad bit more. So these are expiration dates, right? So you got 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 9 days out, so on and so forth. Okay? So the reason you have different expiration dates is because if you want to have more time on your contracts or you want to have a little bit more safety, that's how you want to think of buying further out expiration contracts. Okay, it just basically mean, hey, when I buy this today, I need a little bit more time on the contract because I think it's gonna take time for it to get to 245 or 250. I think it could get there a month from now, 9 days from now, 3 days from now. That's basically what it means when you're buying a further out expiration contract. Y'all tracking me still? Okay. So you're buying time on the contract and it's gonna be safety. Okay. So everything when it comes to options trading is risk to reward and risk, like just risk as a whole, right? So if you want to be a little less risky, you might go and buy contracts that are farther out, right? But what does that also mean? If you're going to buy contracts that are farther out, that means you're gonna have to pay more money, because the likelihood of it getting to that level that you're talking about is a little bit higher. You have safety, you have more time on your hand. So you're gonna pay more for more time. When you have less time, it is more risky, right? When you have less time, it is more risky. Okay, glad everybody's tracking me, perfect. So now that we understand expiration dates, we'll talk about the different types of traders in a little bit. All right, yo, Missy, thank you for the Miss You the Boss. Thank you for the roses. I appreciate it. Okay, so we understand expiration dates. So we saying, hey, it's gonna expire by this date, or hey, I think price is gonna get to this price by this date. Amazing, perfect. We all good. So we got strike prices. We talked about the expiration date. Okay, so now we got to talk about something called the bid and the ask. Okay. The bid and the ask. Right now we're looking at Webull. So let's talk about the bid and the ask. So what exactly is this? Okay. So the bid is how much people are trying to buy the contract for. The ask is the highest price that the sellers are trying to sell it for, right? So think of it like this. People who are trying to buy the contracts, they want to buy it at the cheapest price possible. This is the cheapest price that this contract is selling for. The people who are selling the contract, they want to sell it at the highest price. They want to make the most amount of money. Okay? So this is the bid and the ask. The bid is the cheapest price you can buy this contract for. The ask is the highest price you can buy the contract for. Y'all tracking? So when you're coming to buy a contract, okay, you got to look at these numbers. These numbers are very important. All right? So let's talk about this. So right now we're looking at the bid. Okay? So most of you see 0.91 or 0.93. However, remember what an options contract is. It's giving you the right to manage 100 shares of a company, let's say IWM, at $243. That's the share price. Okay? Perfect. So when you're looking at this, you got to multiply this by 100. However, what is the easiest way to do that other than taking out a calculator and multiplying it by 100? You just move this decimal point over 2 times. Okay? You move it to the right twice. So this is how much you're paying for it. You're paying $91 because 0.91 times 100 is $91. So that's how much this contract costs, between $91 and $93. This contract right here is $152 to $158. This contract up here is $409 to $423. So you're just moving the decimal over twice. Regardless of where it is, you're always moving it over to the twice to the right. Okay? Now I know some of you feel like, oh my God, bro, like I think you just lost me. Let me retract. The agreement, the contract that you're buying is for you to manage 100 shares at a specific price. So basically I'm saying when I buy this particular contract, right, 243, right, 243 calls, I am betting that IWM is going to get to $243 by my expiration date, by the end of my expiration date. And here's how much it costs for me to buy that contract. It costs me $91. Or if you paid $93, whichever one. I think it's fairly simple so far, right? Fairly simple so far. Y'all still with me? I didn't just completely lose y'all. Let me know in the chat. Let me know in the chat. We'll talk about out the money and in the money as well. Okay, good. Good. What's the expiration date? So the expiration date, you can choose whichever one. Okay. Right now we're looking at Webull. Okay. Perfect. So here's another thing that you guys want to understand about these options contracts. The bid and ask is changing all the time throughout the day. Why? Because the stock is changing. So when the stock market is open, y'all probably look at it and it's like, why is it moving so much? It's because there's millions of people or hundreds of thousands of people clicking buy and sell at the same time. Okay? Buying, sell, sell, buy. Like it's constantly fluctuating. It's constantly moving. It's buyers and sellers who are battling between each other. There's people who are buying puts and there's people who are buying calls based off of their analysis of the chart. What do I mean by their analysis of the chart? Basically based off of what they see on the chart. So it's like you want to know what types of contracts to buy so you can align it with your chart. So that way, when a move happens, you make the most amount of money you can possibly make. Does that make sense? I think y'all's tracking me. I think we still good. Perfect. Okay. So now let's quickly recover let's re-go over everything we just talked about. So an options contract, right, is giving you the right to manage 100 shares of a particular company. You can do Apple, Amazon, why is my brain going blank? Microsoft, you know what I'm saying? Goddamn, Celsius. You know, there's a ton of companies in the stock market. So you basically get it, okay? Amazing. So there's something else that's important about the bid and the asks, though, okay? There's something else that's very important about the bid and ask. McDonald's, exactly. Coke, Coca-Cola, you got Disney, you know, all these companies. I think y'all get the point now, okay? Lenny, thank you for the sub. Shatter, thank you for the sub. Daniel, thank you for the sub. Raga, thank you for the sub. Sean, thank you for the sub. Silo, thank you for the sub. Ever, thank you for the sub. Holy shiznit. Appreciate you guys. Appreciate y'all. Appreciate y'all. All right. So there's something else you need to understand about the... Don't be weird in the YouTube chat, please. Please. I don't want to get you blocked. I don't want to have to block you. All right. There's something else you need to understand about the bid and the ask. Okay. The spread. Tez, what are you talking about? The spread. What is the spread? Right? What is the spread? I missed the decimal part. So anytime you're looking at the options chain, just move the decimal over to the right 2 times, and that's how much it's going to cost you. Are you explaining how options work? Yes, ma'am. Yes, Emma. Yes, we are. So anytime you look at the options chain, you move the decimal over to the right 2 times. Okay? That's how much it's going to cost you. $91, $93, $50, $51, right? $11, $12. So when you're trading IWM, yes, you can trade with $50. Yes, you can take a trade with $25. So when you go out there and all these people are telling you need thousands and thousands and thousands of dollars, that's not the case. I've seen people grow $1,000 accounts just from trading smaller tickers, right? Or not even smaller tickers, but contracts that cost less money, because that's what their account can afford. There's a ton of different tickers, whether you have a really big account or a really small account, that you can trade. IWM is just one of those ones that I'm showing you that if you have a small account, right, it's something you could trade. Okay. Is he reading the chat here? Yes, Johnny, I am. I'm reading it. It's just a lot of weird stuff on the YouTube one, so I'm reading a TikTok one. All right. So what is the spread? Okay. The spread is the difference between these two numbers. Okay. So obviously, the people who are trying to buy the contract, they want to buy it at the cheapest price. The people who are trying to sell the contract, they want to sell it at the highest price. And the difference between those two numbers is the spread, right? That's what it is. It's just the difference between the two numbers. So if I click on this number, right, and we open up an options contract, right? Right here, I can buy it in the middle of the spread. I can buy this for $92. So instead of me paying the most, or instead of me waiting to get the least or to buy it at the least price, I could buy it at the middle. And a lot of the times this will drastically help you, because there's this thing called your a fill order, right? So, and it's crazy because I'm going to explain a lot of these big words, hard words that people talk about that y'all might not understand about trading. It's so simple, but you just got to learn from the right person. That's pretty much it, right? So anytime you're trading, you're placing an order. When you buy a call, that's an order. You're placing an order in the market. When you buy puts, you're placing an order in the market. So the market is moving all based off of orders, off of buying and selling. Okay? There's people buying at different prices, right? Some people are buying at the cheapest price. Some people are buying at the highest price. Some people are buying in the middle of these two prices, which is the spread. Okay? So if you're a little bit newer, you gotta be careful trading companies or trading stocks with big spreads. What do I mean by that, right? What do I mean by that? So we can go to a ticker. We'll come back to this one, but we'll go to a ticker that has bigger spreads. So, okay, so let's look at this contract right here. So $355, this is on Coinbase, okay? The people who are trying to buy it at the cheapest price is $570. And at the highest price is $665. That is a big spread. It's a big difference between those two numbers. So if you buy it at the highest price possible,
A lot of times what will happen, this is what's happening to a lot of beginners. They try to just instantly get into the trade. They're not even looking at the contracts. They're not even considering how much they're about to pay. They automatically click fill. They want to get put in the trade immediately. I'm ready to get my feet wet. I'm ready to make some money. That's the whole focus. I just want to make money. I want to make money. I want to make money. Slow down. Choose the right contract. Because here, let's say you buy the contract at the highest price. Well, if Coinbase pulls back, your contract is going to be in the negative a lot quicker than you buying it at the cheapest price. Does that make sense? So here's a lesson for any beginner trader. Try not to take a trade or buy a contract that has too big of a spread. If it's $570 to $665, I don't want to buy that contract. I don't want to buy something where I could potentially get into the trade and automatically be negative. There's been times when I first got started where no one taught me this, right? No one had taught me this. Or at least I was buying courses in Discord groups back then, and I just wasn't getting through the information. So people were teaching it to me, but I just wasn't getting through it. I was being ignorant, right? And that happens. It is what it is, right? Y'all are in here. Don't be like me. Don't be like the beginning version of me that was blowing accounts. This led to a lot of me blowing my accounts. It was me just trying to jump into a trade immediately, not looking at how much I'm buying the contract for, not looking at the difference between the highest and the lowest price for this contract. Obviously, you want to try to get it at the lowest price possible. But that's why I was talking about orders getting filled, okay? So when you're ready to buy calls, there has to be somebody there to sell it to you at that price that you're trying to buy it at. So let's say for this contract, I want to buy this at $600. Well, the highest person is trying to sell it for $665. The lowest person is selling it for $570. I want to get filled at $600. Well, it might take time, right? It might take time for us to find somebody to sell you their contract at $600 because they're trying to sell it at the highest price possible. And that's why people don't consider fills. When your order gets filled, so you buy in calls and it says, hey, your order has been filled. That means you have officially bought it. You have officially traded your money for that contract. I blew mine on high price tickers. It happens. It's all good. It's all good. Am I making sense right now though? So when people are trying to buy the contracts, right, you have to wait until they get filled. And the stock is still moving though. So if the stock, let's say you're trying to buy calls and it's moving up and it's moving up, it's moving up. It might not be anybody there to sell you that contract at the price you wanted to buy it at. Same thing vice versa. If you're buying puts and you're betting that the stock is going to go down, it might not be anyone there for your order to get filled. You can pick the fill price. Basically, exactly. You're basically picking the price that you want to pay for the contract. But whether or not someone's there to sell it to you, that's a completely different ballgame, and it might take time. Okay? What broker is this? We're looking at Webull. Webull. Okay? So, this is important. This is options contracts, guys. Options. Can I move on to the next thing? Is a $1 to $4 spread good? What about a 4 to 6 difference? It depends on the ticker. If it's like too fucking big compared to all the other ones, don't even do it. Let me know if I'm good to move on. I don't know why it was lagging a little bit. Okay, good. I don't know what was going on with that. All right, so now let's talk about in the money, at the money, out of the money. Okay? What about the PDT rule? We'll talk about that shortly. Okay, we good? Okay, perfect, thanks. So, this right here is the stock price, right? So right now, let's actually go back to IWM. So we can all make sure that we're looking at a contract or a trade that you could potentially take. Okay, let's move this back over here. Okay, so this is what IWM share price per share is, right? $242.98. So another way to look at this, when you're looking at this menu, wherever you see this bar with the price of the stock, this is the money. What do I mean by that? It's a term. This is the money. So let's explain this. This is the current price of the stock right now, right? And when you're looking at this chart, you guys see how the top part has this blue background to it, like this blue color, and then this one is just gray. Like the background color of all of these ones are like purplish blue, and then everything down here, the background is gray. Drop a yes in the chat if you guys can see that. Drop a yes in the chat if you can see it. Okay. Keep dropping the yeses. We got 12 yeses so far. We got 329 people in the TikTok live. There's no reason we should only get 20 yeses. Okay, good. Everyone sees this. Okay. Perfect. So when you see the options chain that has this type of color to it, right? Especially on Webull, these contracts are in the money. What do I mean by in the money though, Tez? It means the price of the stock has already passed the strike price. It's already in the money. It's already valuable. So the contracts are going to be more valuable. They're going to be more expensive because the price of the stock has already moved past the strike price. So IWM, the price of the shares is $242.98. Well, $242.98 is higher than 242. It's higher than $241 or 240. And notice how you go up and up and up and up, and the contracts get more and more expensive because they're further in the money. They have already become valuable. They are more valuable. So if you're taking contracts that are in the money, you're going to be paying more for more safety because the outcome has already happened. The price is already past that level. And the further in the money it goes, the more valuable it becomes. So you're basically paying for something that is more valuable. So this is out of the money. Notice how as we go further and further out, right? $242.98, we haven't gotten to $243 or $244 or $245. So notice how the price of these contracts are cheaper. This is called out of the money. This means it hasn't happened yet. It isn't as valuable. Okay? Is the options chain making more sense right now? Okay. So, this is out of the money. This is in the money. Okay? Let's talk about at the money. At the money are the contracts that are closest to the price of where the stock is. So it's going to be these two contracts right here. These are at the money. You're basically paying a fair price, right? You're basically paying a fair price for a little bit more safety. So think of it like this. When you go in the money and you go up here and you pay more, you're paying for safety. They're already valuable. When you go out of the money, you're more risky, right? The chances of this happening or getting in the money, which is the goal, right? When you're buying contracts that are out of the money, you want your contracts to get in the money because they make you more money. Okay? Good. So, with this being said, at the money is the contracts that are closest to where the money is. So this is at the money, in the money, out of the money. And it's all based off of your risk. It's all based off of what type of contracts and risk to reward you want to have. So if you're buying contracts that are cheaper and they're more risky, if the price of the stock continues to move in your direction, you're going to make more money because you took a riskier bet. If it goes against you, you're going to lose more money. Your contract is going to lose money. So that's how people lose money in options trading. Their contract is becoming more and more worthless depending on what contract they bought. How do people make money? Their contract and the price of the stock has moved closer to their contract. So it became more and more valuable. Other people want to buy it at a higher price. So your goal is basically to buy a contract at the cheapest price and sell it at the highest price. Okay? You're buying contracts at the cheapest price and you're selling them at the highest price possible. That is your goal with options trading. Now, another key element is that you can buy and sell these contracts at any time. So let's say I buy a contract right now, I can sell it literally 3 seconds later after I buy it. Okay? Is everything making sense right now? Drop a yes in the chat if everything is clicking. How do we sell our contracts? You put a sell order. So the same way you buy your contracts, you can sell your contracts all through the same brokerage. Okay? Yes, 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 yes. Okay, good, good, good. Perfect. Amazing. Yeah, it'll say sell to close. So in your brokerage, it'll say sell to close, meaning like you want to close out your trade. What if you buy a call contract in the money? You're basically paying more money for security. That's what you're doing. If you buy contracts that are out of the money, you're basically playing it riskier. So how do I trade? So a lot of the times, right, it depends on the expiration date and what I'm trading. So depending on the ticker that you're trading or depending on the stock that you're trading, okay, sometimes it can be more expensive for those contracts. So if you have a small account and you're trying to trade a bigger stock, you're going to have to go out of the money contracts because they're cheaper. You're a good teacher. Thank you. I appreciate that. Yo, appreciate all the badges, y'all. Thank you guys. DR, thank you for the sub. Big Bash, thank you for the sub. Ed, thank you for the sub. Chronicles, thank you for the sub. Aisha, thank you for the sub. Thank you guys. I appreciate all of you guys. When you sell, what's the chances no one buy it and you're stuck with the contract? There's always that chance, right? So now we're going to talk about something that's important as well. Okay? You got to have, when you're trying to sell a contract at a price, there also has to be a buyer. So the same way you're trying to buy it at a certain price, right? There also has to be a seller to where, or let me reverse before I confuse y'all. So when you try to buy a contract, there needs to be someone there to sell you the contract. When you try to sell your contract to somebody, right, there needs to be somebody there to buy it at that price. So this is why it's important. Everything in the market is based off in buying and selling. So, you know, when people try to tell you, you know, the market is so difficult or you shouldn't be in the stock market, all this stuff, it's because they don't understand the simplest parts and the foundational parts of the market. And because you've been in here and because you hit the follow button and you come to these lives more often, because I do them pretty often now, you understand these concepts, these very, very difficult concepts that most people talk about. It's just not that, it's not as difficult. All right, it's not that difficult. You just need somebody to explain it to you in a way where you can understand it. Okay? Now, quickly, before I go into the next thing, which is extremely important. Oh my God, someone just said in the chat, liquid. All right? We're going to talk about that word, right? Because a lot of people be like, oh my God, what is that word? So before I say that, if you're in here and you work a 9 to 5, or you have some sort of active income, okay? Or you have a few $1,000s liquid, right? And you want to get better at your trading. You want to learn better strategies. You want to be able to execute better in the market. You want to do this more seriously. You have the time to do this. This is something serious that you want to do. Because at the end of the day, we all know richest people in the world are either in the stock market or real estate. So why would you not want to get started now? If you're that person, I want to invite you to a private live trading Zoom call tomorrow. It's a workshop. It's private. It's only 1,000 people allowed in there. If you want to register and get your free seat, you click this link, this little button right here on TikTok, this yellow button. You want to go ahead and click that yellow button. And within 2 clicks of a button, after you put your information in, you put it in again, you'll reserve your seat. It's free. Okay? You can click that button right there. You can put your information in and you'll be able to reserve a seat. Only if you have a 9 to 5 or you have active income or you have a few $1,000s liquid. If you are completely broke, do not come to this live workshop. If you have no money, if you have less than $1,000 to your name, do not come to this workshop. This is not for you. I have a bunch of free stuff out there that you guys can take. It's 100% free. I don't even want you to spend no money with me. I want you to just get the information. But if you're the type of person where you already have the money, you already work a job, and you're already consistent with capital, this workshop is definitely for you. You'll get a lot of value out of it, okay? So, as people are doing that, let's explain a word that people oftentimes get confused with or they get scared of hearing it. All right, let's talk about this word that a lot of people get nervous about hearing. Y'all ready? Need the link on YouTube. Got you, brother. Hold on, let me see. Damn, I keep spelling this shit wrong. Okay, so I need y'all to lock in right now though, because this word right here, I know y'all learned a lot. Do y'all feel like I'm teaching too much? Do you feel like your brain is like overload right now, or is this like a good level of information? I kind of got to gauge how much I'm telling y'all, because I want you to get the most out of this class. Was going over the strat yesterday off of your WAP. I got it locked in now. Let's go, Dre. Let's go. Let me do a quick check-in on all my people. Y'all my family, my cousins. Cousins, we good? Do y'all feel like it's too much information? Let me know, because if I need to slow down a little bit, or maybe go back and re-talk about something more often or more before I move on, let me know. I still can't believe all your teachings are free. Hey, you just got to give it out there and let people do their thing. Okay. Cousins, we good? Okay. Okay, good. I want to make sure I'm not overdoing it to y'all brain. I don't want y'all brain to just be completely cooked. Can you go back right real quick? Right real quick. Right, what you mean, on the screen? Or why are the numbers cheaper if it's riskier? Well, that's the point. If the numbers are cheaper because it's riskier, because it's less likely for your contract to be in the money. It's less likely that your contract will get more valuable. So you're basically betting or taking a riskier bet on something that is less likely to happen. But if it does happen, you will make significantly more. So let's look at some contracts in my Discord group real quick. I'll show you guys this, for example. Okay. So when you guys are looking at people, if you guys ever seen people, like whether it was me, I know there's times where I come on here and I'll show results and stuff like that. But like, let's go to like our trading profits channel, so you guys can just see, actual percentages. So these are people who are growing their accounts. So we work with people who have money, right? This is what I told y'all. If you're coming to the live trading workshop by clicking this link right here, right? And you have money, this is the thing you want to come to, because we help people do stuff like this, right? Where you're able to make $11,000 in the past 3 months. You don't need an insane amount of money, right? Making $500 in a day. Like, I'm not here to tell you and show you how to make $10,000 a month and $100,000. I'm just not that, right? I would rather show you how to compound your account. I would rather show you how you can pay for groceries, how you can pay your phone bill, how you can make your insurance bill. I want to show you how to do that. I'm not here to set unrealistic expectations. It's going to take you a minute before you get to 10K months unless you have the capital. If you don't have capital, it's going to take you some time, and that's fine. But I'm not the person to sell y'all this dream. I'm just going to be realistic with you. I help people be able to pay for little small bills, and then over time they're able to grow their account. And then when their account grows and they can use more capital, that's when they're able to really make way more money. But you have to make a small amount of money first before you instantly try to make a bunch of money. That is someone who is trying to scam you. I've not sold y'all anything in this class. I don't want anything to do with unrealistic expectations for you. You're going to have to put time in. So starting with a small account is actually better, and having a job is actually better before you get into trading. Listen to me. Listen, I know you might think, some of y'all are watching this and you're like, oh, he not talking about me though. I am the oddball out. I'm the black cat. Listen to me. You who thinks that. It's not true. It's not the case. You're not the oddball out. Okay? If you don't have active income, or if you don't have money liquid already, coming into trading where it relies on you learning how to lose money. Trading is not about making money. On some real shit, like, let me just be honest with y'all. Before we get into this next part, I'm gonna just do a quick little rant, like a small little rant. But the reason people lose so much money in the market is because they come in trying to make money in the market. And when your intentions is to solely make money, you forget to listen and look at this, your trading plan. Your goal when you come into the market is not to make money. Your goal when you come into the market is to execute your plan. Does that make sense? I am showing up. I am looking at a chart. I'm coming prepared to the market. I have a set of rules that I'm willing to follow. And then when I see these things pop up in my face, I take the trade, and I'm okay with the amount of money I lose. So the thing is too many people try to come into the market trying to make money. What I want you to understand And the most important thing you could possibly understand when you're a beginner trader or elevating as a trader is it's not about making money. It's more so about your ability to follow the damn plan. A lot of people can't stick to one thing. This is why I say, if you don't already have a job, if you don't already have, like, it's going to be hard for you to follow a system because you don't have a routine. People who work a 9 to 5, guess what? They got to get their ass up in the morning so they can get to work. And they're on a routine. It's going to be easier for you if you go to the gym consistently. It's going to be easier for you to be a better trader because you have a routine. If you eat healthy and you stand on these things and you stand on eating healthy, you're on a routine. It's going to be easier for you to stick to another routine. I don't like working with people who have unrealistic expectations or think they're just going to be the oddball out no, that's not the case. I'm a realistic person. So the thing is you're coming into the market trying to make money. That is why you're losing money. I come into the market trying to follow every step of my plan. And when you follow your plan, when you have a plan and when you follow it every single day, the consequence of you following your plan is making money. The consequence of you following these rules is you making money. The consequence of showing up every day and journaling and writing down all the things you did wrong, writing down all the things you did right, writing down all the things you learned from the market, because the market is going to teach you something every day. Even right now, as I've been doing this since 2021, I am still learning new things every single day. The market is constantly changing. Under a different president, the market changes. Under certain economic standards or environments, the market changes. So you have to be adaptable. You have to be willing to stick to this plan regardless of what goes on. That is the only way you will become a profitable trader. Okay? So when you guys see stuff like this, right? People hitting 113% or making $1,700. Really, I want you guys to pay attention to the percentages. When you hit higher percentages, it's because these contracts are out of the money. So look at this. Tesla 526%, right? He bought out of the money contracts. So he 5x'd his money from buying contracts that are out of the money. They are cheaper. They are riskier. But when the price moves in your direction of your contract faster, you make more money, right? 386%. This is a different trade. He's buying contracts that are out of the money. So you can buy cheaper contracts. They're going to be riskier. But when it works out in your favor, you can hit higher percentages. So in this day alone, he 5x'd his money on this trade. So that's $100 to $500. And then he almost 4x'd his money on this trade. So that's $100 into $400. So if he would have spent $200, he would have made $900. Now, exactly, and it's based off the Greeks too. The Greeks, if I try to do that right now, their brains would be completely cooked. So we're just gonna leave the Greeks for right now. People need to understand just the complete basics. When I start explaining the Greeks, everything else just goes out their mind, right? So like, this is my group. A lot of what we do is we trade out of the money contracts. Unless we're trading something like IWM or SPY or QQQ, we'll trade at the money. We'll trade with a little bit more time, a little bit less riskiness, right? Depending on the account, right? We'll trade with a little bit less risk, right? We'll pay a little bit more for better contracts. And then when the trade works out in our favor, we get paid sooner. Are y'all tracking me right now? What's up, Joshua? What you talking about right now? Options trading. Okay. Drop a yes in the chat if y'all still here. If your brain cells aren't completely shot and you are still hanging in there, let me know in the chat. Let me know in the chat. Okay. So I want to show y'all this stuff, like actual proof of people like making significant amount. Look, 450%, right? On one trade, right? So he turned $20 into $110. Right? Like, these things happen because you're buying out of the money contracts and the price of the stock is moving in your direction. Okay? Good. So do we now have a better idea of how the options chain works? Do we have a better idea of how the options chain works? Drop a yes in the chat, if so. Do you feel like a little bit more confident when you look at an options chain Do you feel a little bit more confident when it comes to looking at options trading or just like understanding an options contract? Do you feel just a little bit more confident? Do you feel like I can kind of get I'm starting to get the hang of it just a little bit. Maybe I learned a little bit something. It may not be, brain overload. My goal is not to overload your brain. My goal is to just give you small bite-sized information that you can go think about later. I turned $28 into $500 the other day with Lyft. Yeah, I seen Lyft on the weekly time frame. Looks amazing coming out of that demand zone. Okay. Good. I'm loving it. I'm glad you guys are getting this. Okay. So good. So let's talk about a word that a lot of people just don't understand. Okay. I want you to maybe write down what you just heard or put it in your notes real quick. Okay. So you don't forget. Okay. When you guys are trading, there's this word called liquidity. Okay? There's this word called liquidity. Let me do a quick summary of everything before we talk about liquidity. Okay? So, 1, we talked about what an options contract is. It is an agreement or a contract that allows you to manage 100 shares and you can buy and sell this contract to other people so they can manage those shares. That is an options contract. 2, anytime you look at an options contract, right, you have to remember that it has an expiration date. You can only manage this contract. You can only buy and sell this contract until this expiration date. That is when the contract expires. 3, when you are betting on a stock, you have to know what price you think it can get to. This is called the strike price. This is where you think it's going to get to by the expiration date. 4, there are different types of contracts you can buy. You can buy calls or you can buy puts. When you're buying calls, remember your hand is like this. You're betting on the stock to go up. When you're buying puts, you're betting on the stock to go down. Think of putting the phone down, okay? 5, right? There's the bid and the ask. The bid is the cheapest price the contract is selling for. The ask is the highest price it's selling for. Now, whenever you're looking at the bid and the ask on the options chain, this is the options chain. It's like your menu, as if you were going to Chick-fil-A and you're about to order some food. This is your menu of where you can buy your options contracts. Anytime you look at this, you have to move the decimal point over twice. You got to move it over. 1, 2. That is how much the contract costs. Cost you $91, $93, $228, $239. Okay? The difference between these two prices from $91 to $93, that is called the spread. That is the openness or the difference between it. If you were to subtract 93 from 91, right? Or 91 from 93, it's $2. It's a $2 difference. That $2 difference is called the spread. When you are trading options, you are placing orders. You're placing a call order. You're placing a put order. Okay? Calls, you're betting on the stock to go up. Puts, you're betting on the stock to go down. You're explaining great, Tez. Thank you. I appreciate it. That was a quick summary of everything we just talked about. All right? Next is something called liquidity. What is this word? It sounds so big. It sounds so confusing. Liquidity is just another word for orders. Liquidity is another word for orders. Okay? Always remember that. When somebody says liquidity, just think, oh, orders. So when someone says, trade something that has high liquidity, that means it has a lot of orders. Meaning it's easy for you to get in and out of the contract. It's easy for you to get in and out of the trade. When you're trading and you don't have high liquidity, if you don't have a lot of people trading it or a lot of orders going through in and out, sometimes when it's not as liquid, remember, there's not as many orders, right? What'll happen is it'll be hard for you to get into a trade or get out of a trade. Now, why is this important? Why is liquidity important? Well, here's the thing. People try to trade a whole bunch of these different tickers, these small tickers, right? But they're not as liquid. There's not as many orders going through. So what my advice to you is to trade stocks that are liquid. Trade stocks that have a ton of orders coming in and out. Trade stocks that a lot of people trade. High liquidity, high orders. Why? Because it's easier for you to get into the trade and get out of the trade. It's easy. There's been times where I've seen people make a bunch of money, but they can't sell the contract because there's no one there to buy it. There's no liquidity. There's no orders. Does that make sense? Does that make sense? Does the word liquidity now sound less intimidating to you? Drop a yes in the chat if so. I'm not seeing enough yeses, so maybe I did a terrible job at explaining that. Okay, so what are some stocks that are liquid, right? What are some stocks that known tickers that you can trade that has high liquidity? What would be a couple? Amazon. A lot of people trade Amazon. Microsoft. A lot of people trade Microsoft. Somebody said Tesla. Tesla is very liquid. There's so many people trading Tesla stock. Apple, very liquid. Meta, very liquid. The Mag 7, that is correct. Nvidia, very liquid. There are millions of people trading it. So how do you determine how liquid something is? Well, guess what? If a stock that you're trading, when you're looking at the options chain, has a very tight spread, like a $2 difference, that means that stock is very liquid. There's a lot of people trading it. So if you look at this, how do we know this is liquid? You can look at something called the open interest and the volume. The volume is how many contracts have been exchanged so far today. How many contracts have already been bought and sold? 10,000. How many people have these contracts right now? 1,100. That is the open interest. That is the open amount of orders on it right now. These are people who are currently holding this trade. So it was about 10,000 people who traded it, and there's 1,000 people who are still in it. This means for this ticker, it is liquid. When you have high volume and high open interest, the trade is liquid. There's a lot of orders being placed. They've already been placed and they're still being placed. Which means when these two are high, the open interest and the volume, the spreads are going to be tight. That is a tall tale of if you should trade this ticker or if you should trade this contract. If it is liquid, is it easy for me to get into this trade, and will it be easy for me to get out of the trade? Are y'all tracking me? Are y'all following along still, or did I lose you? And this will lead into the next most important thing, is how do you choose the right contract then, Tez? How do I choose the right contract? Still here, making sense. Good. Right? It's very liquid. Good. Now we understand this really big word, liquidity. When you hear it in a YouTube video, just think orders. Orders. Awesome explanation. Good. Glad you guys like it. We tracking. Good. So, the open interest and the volume. Should the open interest needs to be higher than volume? No, it doesn't. It doesn't have to be. As long as it's high, the spreads will be tight. So even when you come out of the money, there's a lot of people trading these. There's more people trading the riskier stuff than there is people trading the less risky stuff. Why? Because most people want to make a significant amount of money. So they will take the risky route and hope that it works out because they'll make more. These people are taking the safer route. They're a little bit on the safer side. They want to buy in the money contracts. In the money contracts that have high liquidity, meaning I can get in and out. I can get in and out pretty easily. Right? So if you're buying contracts out here, notice there's always a ton of people out here out of the money. Why? Because they want to make a bigger amount of money. Okay? There's always someone on the other side to buy your contract or sell it. Exactly. Good. Now, do we feel better about an option chain? Do we feel better about options trading? Simmer, thank you for the sub. Sean, thank you for the sub. Jubison, thank you for the sub. Grace, thank you for the sub. Thank you guys. I appreciate it. Yes. Yep. I need more yeses than that. Just want to confirm everything making sense. Okay. Perfect. This is the options chain. It is no longer as difficult as it was before you came in here. This is the options chain. Choosing the right contracts is very important. So what do I do when I'm looking for a good contract to buy? I look for a contract, number one, that I can buy that doesn't kill my account. So your goal isn't to spend all of the money in your account to buy one contract. That's not the case. You have to take a percentage of your account, and that's what you trade with for the day. So if the percentage of your account is $100, then you'll buy contracts with $100. So what type of contracts can I get with $100? I can get one contract at $93. I can get two contracts at $50. I can get four contracts at $25. Okay, so now I know how much I'm gonna trade with. I know how much money I can spend on contracts. That's first. Second is knowing when I want to get into the trade and when I want to get out of the trade. That's where the technical parts come in. That's where a lot of my normal classes are at, right? Or normal streams. I talk about the technical side, the charts. But now you're aligning the charts with your contracts. If you don't choose the right contracts, you're going to cook yourself when you take the trade. Because if you go too far out of the money, right, it's less likely that the trade will play out in your favor. If you go too far in the money, you won't have the money to be able to afford the contract. So you got to have a median. Well, how do I find my median then? Well, ask yourself, how risk adverse am I? Where do I think the price can go? Where's my exit on the trade? So you now know where you're getting in, but where am I getting out? And based off where you want to get out of your contract, you can say, hey, I want to buy contracts or the strike price that's close to my exit, that's close to my target. I can either go a little bit, and let's say you try to take a trade and your target is out of the money, right? But the contracts are still too expensive. Then guess what? You can go down to the point where you can afford it and then get those contracts because you can afford it now. But you have to make sure that there's liquidity. You have to make sure that there's open interest and volume. Can I get in and out of this trade easily? So the reason that I tell people to trade IWM is because the contracts are cheap and it has high liquidity and it moves really often. You can get paid and it's pretty consistent. So when I'm picking my contract, I know where I'm getting in and out of my trade. Second, can I get in and out of the trade easily? Will there be somebody to sell me the contract? Will there be somebody to buy my contract when it's time for me to get out? Is the spreads tighter? If not, am I okay with taking that risk of knowing that if I buy it, I might get filled at a bad price within that spread? Am I okay with that? That's up to you. Right? So these are the things that I look at before I buy my contract. Make sense? Where's my target? Where do I want to get out of the trade? Okay, well, how much are the contracts that are closest to that price? Oh, they're a little bit more than my account right now, than my account can afford. Let me go a little bit further out of the money so I can buy something that I can afford. Let's say you can afford it, right? And you want to just buy more contracts. You can go further out of the money. Y'all tracking me? Does this make sense now? So now you know how to buy the right options contract. So let's take a look at the trade IWM that I called out in my group on Friday. Okay, this contract, this trade played out perfectly. So first, I'm going to show you guys the proof first. Okay, so I ended up recharting everything, so disregard the chart right now. Okay, so now let's look at this in real time. Okay, so let's go over to the Discord, and we're going to go to day trading signals. And this is where I sent out my trades for the day. And okay, just delete this real quick. Okay, so you guys see this right here? This is yesterday, which was Friday. This is yesterday at 9:14 a.m. Okay, so when you're trading options, the stock market opens at 9:30. So look at this. I sent this trade out at 9:18 a.m. So I said trade idea, IWM. We broke out into all-time highs and has $250 in sight. That's the stock price. It had that in sight. We also have a 3-bar on the 6-hour. Wait for 10 a.m. to take the break of the 3-bar. What does that mean, Tez? What are you talking about? Well, I teach the strat. I trade the strat. So what does that mean? On the 6-hour time frame, you had this candle here, right? This is a 3-bar. This is an actionable signal, meaning that when something happens, I am going to take this trade. So how do you trade a 3-bar? You mark out the high and you mark out the low once this candle prints. So now you're basically saying, hey, I'm waiting for either a break above this 3-bar and we break all-time highs, or a break below and we come down and fill a gap. So my entry is calls above 246, puts below 244. That is what the trade looks like. And it's coming off of a higher time frame. So how am I breaking this down? 1, I understand where I'm getting in. 2, I need to understand where I'm getting out. This right here, these wicks right here is my target. Where do I get this from? This wick back here. This is a target, 242.82. That is my target. Why is it my target? This is a place of resistance in the past. This is where price came up and we rejected and then we broke through. So we are likely to come back and retest it and either break through or we bounce. It is support and resistance. That's it. This is where my target is. So now when you go down to a lower time frame, right, look how this plays out. We'll rewind it. Watch the confluence. What do I mean by confluence? Watch how multiple things align themselves before I take the trade on a lower time frame. So I found it on a higher time frame. I found it on a 6-hour time frame. But now watch how the lower time frames match up with the 6-hour. So what do I mean by that? So look at this. Well, first off, this candle right here, okay? This candle right here tells me a story. And this is something I talked about in a class where I do, it's called a candlestick anatomy. How does a candlestick open? How does it close? And how do you read the candlestick? How do you read the wicks? Because a lot of people don't know how to read a chart. They don't know. And I have a video coming out on YouTube that you guys can watch. It's going to be free. It's going to be amazing. I know you guys are going to love it. CJ, thank you for the sub, bro. Thank you for the sub. Thank you guys. Okay. So let's watch this. We found it on the 6-hour and we marked it out. So we're saying, hey, we're going to take puts under $244. My target is 242. So when I go look at the options chain, right, I can go grab $242 puts. I can grab 243. I can grab, or, you know, let's go look at puts, right? So you got to switch it at the top. Now I'm looking at puts. So I want to grab 242s. Oh, well, look at the spread. The spread is tight. Oh, it's only $50 for a contract? Bet. I can take this trade. That's what my account I can afford that with my account. Right? $27 to $29, it's a little bit more risky, but I can buy more contracts. So if it hits my target, I can let a few more of my contracts run, just in case you want to pay me a little bit more. Okay, cool. I know where I'm getting in, I know where I'm getting out, and I know what contracts I want to buy. Now, I'm just waiting on the stock to do what it needs to do. It needs to trigger. I don't take a trade unless it triggers. And why do I not do that? Because it's a part of my plan. It's laminated. I read this before I trade, so I can remind myself to not take a trade out of emotions. So I found this on the 6-hour. This candlestick right here tells me that, hey, we tried to break higher. This wick is telling you a story. Regardless of any indicators, this candlestick right here tells you a story. Sellers didn't like the price up here. Sellers did not like the price up here. So what happened? When the market opens, you had buyers taking profits and you had sellers buying into puts, pushing the stock down. So this wick told me right before the market opened, the buyers, they don't look like they're in control right now. Sellers are looking like they're in control, but I need more confirmation. My confirmation is on the higher time frame. If it triggers on the 6 hour, it is likely to play out in my favor. I'm not worried about the lower time frame. It just needs to match the higher. So where's my targets? You can have a target right over here. Where is this target coming from? A recent wick. This is where we touched before, but it's too close to my entry, so I'm not going to consider it. Cool. Where can I, what other one can I consider? This one right here. So now this is target 1 and this is target 2. This is how I find my targets. So now watch what happens. This next candle opens, it breaks lower, right? So you take the entry, right? You take the entry. Let's say you took puts right here. Well, look what happens next. We come down and we hit our first target. What happens after this? Well, it didn't hit my full target yet, but you're in the green, right? It went from the price of $244 now to $243. So your options contract is more valuable. You bought it at a cheaper price and now it is at a higher price. And then what happens next? Price continues. Now you're saying, hey Tez, I'm really close to my target now. You wait and you let your target get hit. If the target does not get hit, I'm not taking profits yet. And if you do, that's fine. Just make sure it aligns with your plan. What happens with the next candlestick? We bounce, but we tap the target. I mean, we miss it by like a few cents. You could have taken profit right here, but it literally came back right here. I mean, we're literally 2 cents off. 2 cents off. And then what happens the rest of the day? Price bounces off of support, right? This is why it's a target. It is a target because this is the next likely place that price will bounce from. This is the next likely place that when I want to get out of this trade, this is where I want to get out at because it can reverse against me, right? And then look what happens the rest of the day. Target 1 hit, target 2 hit, target 3 hit. And then it's no coincidence that we get trades in entries or trades in people's profits. It's no wonder we get entries like this or profits like this. 59% on IWM puts. Let's keep scrolling up. 87% on IWM puts. These are out of the money contracts, right? Look at this. 75% made $180 on IWM contracts. 100% on IWM contracts. 172% on OKLO. That's a different ticker, right? $475. So this is how I trade. This is exactly how I trade. I mean, and this is how we do it on an everyday basis. Like this is inside the Discord group. You can see how active it is. Look at this. First 1K day in TSA. So like, I get it. You might be more confused about how to trade now because this is your first time being here. You know what I'm saying? Like, and that's fine. But again, I told you, my goal isn't to show you how to make $10,000 a month and all this shit, bro. You know what I'm saying? Like, it's not about that. What matters the most is you being able to execute and start growing an account. You gained a new follower after the breakdowns. Gotta bounce. Keep going. Thanks, bro. I appreciate that. My Discord is currently closed. However, if you are interested in trading better, you want to get better at all of this. Let's say you already lost a few $1,000s trading, or you have a 9-to-5, you have an active income, you're making money, or you have money sitting on the sidelines, sitting in a bank account, you have a few $1,000s, you have more than $1,500 to your name, and you want to reserve a free seat to tomorrow's live trading workshop. It is a private Zoom class where I'm going to be teaching a ton of other traders the Strat, smart money concepts, which is a concept of how I trade and how to grow an account. If you want to attend that live and you're here on TikTok, you click this yellow button right here. And what you're going to do is you're going to put your information in 2 times. So that way we can officially reserve your seat and we can send you the link to be able to join the live trading class tomorrow. we can only seat 1,000 people. So when we hit our capacity, I literally cannot let anyone else in. There's a fucking cap that Zoom has. So you have to make sure as soon as you receive the text message, you join. If it's not something you're serious about, don't waste a seat for somebody else. Okay? This is not for people who are broke. This is not even broke. This is not for people who are financially not in the best place to be able to trade or to be able to get into the stock market. This is not for those people. It is tomorrow at 7 p.m. Eastern. It is a private Zoom call. I will not stream it. I have a PowerPoint presentation. I have a whole breakdown for y'all. It's straight up game. If you want to join that, click this right here and pull up at 7 p.m. Eastern. Proof is in the pudding. The proof is in the pudding. So this is the IWM trade. Let's look at Apple. Okay, can I break down Apple to you guys as well? I think this will be a great explanation for those of you guys in here as well. Unfortunate that I already did my charting for the week, so it's not going to show. But what I can do is I could come up to the daily time frame, and you can see my levels right here. Tomorrow at 7 p.m. Eastern. You click right here to reserve your seat to tomorrow's live trading workshop. If you guys are here on YouTube, I will drop the link for you guys down below in the comments. Just options. I trade just options. Okay. For my people in here in YouTube, I just dropped the link down below in the description. If it doesn't let you click the link directly in the not the description, in the comments. If it doesn't let you click that link, just copy it and paste it into your browser. Okay, so here's Apple, a trade that I ended up missing out on, which is all good. So how did I find this trade? Well, Apple had recently announced the sales, or not the sales, but the release of their new iPhone 17. Okay, so there was a catalyst. There was important news that came out about the company that put it on my radar, that put it on my watch list. Okay. The next thing I did is I said, okay, this is something positive for Apple. Everyone loves iPhones. They have a huge customer base. So obviously it's going to be a lot of people. Then I see an article where in Asia, there was like huge lines of people trying to buy iPhone 17. This is good because the company is going to make more money. Okay, amazing. Now I understand the catalyst. I understand the important event that's going on. I go look at the chart. Well, before we had this candle breakout right here, this is what it looked like. So we were at another level of support. Resistance. This ceiling right here. I was waiting for price to break through this ceiling. So I marked off the charts and I looked back to the left and I said, hey, okay. Price has sold off before from this level. We came down, found support again. We bounced off. And now we're at the same place. So now I am willing to take this trade because it has positive news or a positive event around it. And it is at a level where it can break out. And my goal is for it to hit 245, which is where it was a gap in the on the chart. Okay. That was my target. And then 250 is another target. So then I found this off of a daily time frame. I found this off the daily. So when you come down to the 30-minute, this is what this looks like. My levels are charted off on the higher time frame because I trust the higher time frame more than I trust the lower. All I'm looking for on the lower time frame is for it to match my overall analysis on the higher. Does that make sense? If I see it on a higher time frame, I want to take the entry on the lower time frame, but it needs to look good. What do I mean by look good? I need to take an entry off the lower time frame. Okay, Tez, what the hell are you talking about, bro? Well, let's see. When Apple opens, we broke above, right? So yes, you could have taken this entry right here, right? But what I know about the market is that when big companies like Apple, Amazon, all these companies, when they're at like really, really key resistance and support levels, what the whales or the big investors will do, they'll fake you out. What do I mean by fake you out? They'll push this up right out the gate and then pull it back. So I didn't take the initial entry. I actually missed this trade entirely, but I wouldn't have taken this initial entry. Why? Because in the beginning of the day, that's when the most BS goes on. I don't take trades in the first 15 to 30 minutes of the day, right? I'll wait until we get a better idea of where the market is doing and where it's going to go. So I'll look at stuff like QQQ. I'll look at SPX, which is the S&P 500. I'll look and see what the overall market is doing first before I just take a trade. Okay, so now the first 30-minute candle prints, and I'm like, whew, glad I didn't get into that trade yet. I stuck to my rules. I wait until the first 15 to 20 minutes or 15 to 30 minutes of the day. Then I look for my entries. So I saved myself from being faked out. So we faked out to the upside. Then we came lower and we faked out again. And now this is where I want to look for an entry. Now that I've seen that, hey, they stopped all the bullshit, now I'm looking for the entry. Now I'm looking for the entry. I don't want to be this person that gets stopped out the trade. Right out the gate. As soon as the market opened, you just took an L. I mean, yeah, you would have been in green if you would have took it at open. But if you were holding to your target, I mean, this shit pulled back quick as hell. So you were green at one point, but because you're waiting till your target gets hit, you end up getting pulled back. It ends up pulling back against you. So now when I notice that, hey, okay, sellers don't have control. Look at this candlestick. We came down and retested previous week highs. This is what PWH is. Okay, cool. Well, now I'm looking for the break. And look at the break. Is it clicking or is it clicking? Is it clicking or is it clicking? So this candle here is a failed two up. We failed to go higher. We faked out everybody in the beginning of the day. We faked out all the buyers, right? We faked them out soon as the beginning of the day. That's what the institutions do. They are the ones who are moving the market. They are the ones who can make shit like this happen, where all the retail traders, anyone with smaller amounts of money, you're jumping into this trade and you thinking, okay, it's about to go to the moon. It's about to go straight to my target. That's not always the case. You have to be careful trading in the first 15 to 30 minutes of the day. So I stuck to my rules. We push up. We reverse back down. We close lower. The next candle opens. We break lower and we try to break under previous week highs, which is a level of resistance. A level of support. And it holds. So now that it holds, this is confirmation. Now the next break is the break I want to take. That's how retail traders get caught. That's exactly how they get caught, right? So look at the break of this candle. Now when it breaks, I take my entry. You take calls. You think it's going to get to 245? You might take 245 calls. They're out of the money. They're going to be cheaper. Or you can say 242 and a half calls, right? Whatever whatever options contract. You're buying the contract because you know where you're getting out. Is everything meshing together now? Is everything meshing together? Let me know in the chat if you're still with me, and if it's clicking, if it's like I'm looking at this and I understand what he's talking about. Like finally I understand. Or maybe you just have a different perception of it, or maybe you look at it with a different mindset. How many of you feel like that right now? Let me know in the chat so I'm not feeling like I'm the only one. We broke out higher. So look at this. This is where I found, look, this is resistance on a daily time frame. This is resistance. When you go down to the lower time frame, it looks like this. So you're just waiting for the break. But I don't take my trades in the beginning of the day. So I wait. I be patient. Most people will be like, oh my God, it's running without me. I got to jump in. I got to make money. I'm not worried about making money. I am only worried about following my plan. That's it. When I follow my plan, money will be a byproduct. How did I find this trade? Because I knew that Apple was releasing a new phone and there was a lot of buying intent in another country. And I seen it in an article. So I used fundamental analysis. I read the articles. I went and did my due diligence. I don't trade in the first 30 minutes of the day. So when the market opens, it pushes up and it flushes back down. Boom, it pulls back, it finds support. Now I'm like, okay, we found support now. Bet the next breakthrough. This is potential, and it's not like 100%. This is just the place where it's a confirmation now. It's like, okay, this is the trade that I want to take. This is the one that meets my criteria. And I'm on a 30-minute time frame right now, everybody. When I'm trading, I'm looking at the 15 and the 30-minute on the. I'll find my plays on like a daily or a 4-hour, and then I'll go down to the 15 and 30. And the only time I use the 3-minute or the 5-minute is at the end of the day when I trade SPX. But if you're a complete beginner, don't even just completely just let that go in one ear out the other. That's for my more advanced people who trade. Okay. Now here's something very important. I talked about this recently. There's this thing called candlestick body closure. Candlestick body closure. What the hell does that mean, right? So when a candlestick closes with a huge body like this, right? This is confirmation that buyers are in control. This is confirmation that buyers are in control. Why do I need to know that? Well, if I'm looking for price to hit my target, I need to see that they're in control. So when this candle closes, right? Because here's the thing, the candle opens up here, and throughout this entire candlestick, it's in all these different areas until it closes up here. When you see it close up there like that, right? Now this is confirmation that buyers are in complete control. Now I have less hesitation when I'm in the trade. I know what party has control. I know why I took the entry. I know where my target is. I know who has controls. So now it's going to be easier for me to watch. So we have a little breather, right? We consolidate a little bit. We push up higher. Okay, so now my target is in sight. And then look what happens. These are buyers that are in control. Exactly, it's the same for a red candle as well. If you see a very large red candle body stick or a body, I want to show y'all an example, but if you see a very large red candle and the body is big, sellers are in control. And this is why the anatomy of a candlestick is so important. You have to know who is in control, and you know who's in control by reading the price or reading the candlestick. So look who's in control. So now we're coming up on my target. My entry was here. Why did I enter this trade? It was a resistance level on the daily time frame. We walked through this together. The second reason is they had a new event, right? They dropped iPhone 17. The third thing, right, is that I knew after the first 30 minutes, the real move will happen. This is the trend. After 10 a.m. is when the trend begins, right? The market chooses which direction it wants to go in for the rest of the day, for the most part. All right? And then look what happens. We come up, we break through, and we hit my target. And now you sell your contracts. And then look what happens the rest of the day. We just consolidate. We stay in this range. This is how I find my trades. This is how I follow my plan. This is how I trade my plan. This is how I show up to the market. Y'all have seen me trade live with y'all. I have YouTube videos of me trading live in front of y'all, giving you the entry, giving you the contract I'm buying, showing you when I'm in, showing you when I get out. I don't even know how many lives I've done now. You can go look at it on YouTube if you think I'm lying. And I show you the profits from the trades. All you have to do is go do your due diligence now. You know what I'm saying? Like, you gotta just put the work in. You're a great teacher. I appreciate you. No problem. I'm glad you guys are liking it. Are y'all tracking me? Is everyone still following along with me? Shout out to everybody that's been in here since the beginning. We've been live for an hour and a half. Now think about that. All those people out there drinking, smoking, getting ready to go do whatever they gonna do, and you decided to come in here and get some information, some knowledge, some game. You just gotta choose what you do with your time. It's no coincidence why some people are in the position that they're in, because they prioritize things differently. I don't kick it. I don't go out. I don't think it, like, for me, I'm out of that phase of my life where standing on couches and drinking is cool. I'm just out of that phase. I'm more so in the phase where, like, let me lock in, right? And let me go do what I need to do so I can get to the next level. Let me go become the person I always wanted to become. Because that's what's more important to me. Like standing on a couch is always gonna be there. Drinking is always gonna be there. But the time that you need to get to where you want to get to, that's moving every day. So when I tell people like I pay for information, I pay for courses, I pay for mentorships, I pay for this stuff because the time is the most valuable thing to me. You see, I've studied the richest people in the world, right? I've studied CEOs of these companies that we trade, and these are some of the richest people in the world. And there's something that I've noticed after going through the P&Ls of their companies, looking at the products that they release, how they obtain their customers. There's something, and I have a notebook where I take notes of all the products that Microsoft is selling and what type of products Tesla is selling and what is SpaceX and how does space evolve? How do we evolve as an economy or as a world in space? I look up all these things and I do my due diligence. I read the articles. I go be a nerd because sitting on a couch or standing on a couch and drinking is not cool. So what I'm gonna do at that time, I'm gonna go learn something that can make me money. And then I'll pay. When I make money, I'll go pay somebody else for somebody else's knowledge. I need to pull your perspective out of you. I need to learn or look at things the way you look at it. Because if you're in a position where I always wanted to be at, or if you're doing the thing that I want to do, why would I not pay you to cut down the time? But people don't get that. People are so attached to the money that they forget that the richest people in the world don't value money. They value their time. So they'll go hire people who are smarter than them so they can get their time back so they don't have to do these tasks. They will go hire somebody as a mentor. They will go purchase conversations or consultations with this person because they know more. And they understand I'm only a little shift away from making more. I'm a little shift away from hiring somebody better. I'm a little shift away from changing my perspective of my system of how I'm doing this. So when you go look at the top companies in the world and you look at their CEOs, the only difference between them is you might say money. What I see is their priorities and what they did to get their time back. And as a byproduct of them getting their time back, they made more money. The only difference between them and you is they make more money per interval of time. Whether it's per hour, per day, per week, or per month. They are making more money than you because they went out and they went and hired the people who are smarter than them. Have y'all ever seen the quote where, I never went to Harvard, but the people who work for me did? That's a flex. But you got to be willing to take the risk. You got to be willing to spend the money. So when I was on live a couple days ago, and I was like, yeah, I spent $80,000 on myself. In education, in courses, in discourse, in mentorships, in systems, and working with a company for a month or 2 months. And when I tell people that, they're like, hell no, I'll never do that. Well, that's also why you'll never see the type of money that I make. You'll never be able to get there because you're not willing to sacrifice the same way that I am. I'm not attached to the money. I'm attached to my time. And there's the only way you get to where you want to be at in life, whether it's through trading, starting a business, being a content creator, is you have to value your time more than you value the money. Because if they're printing money every single day, why would I overvalue something that is being printed on a day-to-day basis? Are y'all tracking me, or am I are y'all following along? Am I clicking? Am I making sense, or am I talking to a brick wall? I need y'all to let me know. Am I resonating with at least a couple of y'all? Not everyone in this live is gonna get where I'm coming from, but there's a select few of you who's like, nah, he's preaching. He's talking that stuff that I like to hear. The average person don't have 80K. I didn't have 80K when I spent it. I spent what was necessary for me to get the information. You either become resourceful, right? Or you don't. Now, I'm not saying every person has to spend 80K. What I am saying is if you got a couple $100, don't be afraid to buy knowledge. That's what I'm saying. It's not about how much money I spent. It's the fact that I did it. It's the fact that I took the risk. It's the fact that I valued what someone else knows more than the money that I have. And that is why I continue to elevate, because I'm not afraid to go spend the thing that I know they're printing every day. I'm not afraid to go look at what's in my account and say what's going to bring me back more. The S&M 500, not the S&P 500. What you gonna make? 8 to 10% a year? Fuck 8 to 10% on some real shit. You think you can't go back? You think you can't go out there and go make more than 8 to 10% if you spent the money on yourself? You really think that? Couldn't be me. Couldn't be me. And I'm not saying there's anything wrong with making 8 to 10%. I'm not saying that at all. I'm just saying at every fucking corner, I will always bet the house on myself first. Every time. Every time. And even if it don't work out, guess what? It didn't work out because I didn't make it work out. I went out my way. It didn't work my way. And that's cool because I'd rather it not work my way than do somebody else's way and it don't work. But what do I know? What do I know? I guess I'm just talking. I guess I'm just talking. Who knows? What's your Discord? My Discord is currently closed. Sorry. I don't want y'all to spend no money with me right now. Everything I'm giving you is free. I just hope you enjoy it. I just hope you do something with it. That's all I ask. And if you do have money and you do want to learn how to trade better and you do see yourself being in the market and you want to learn from me, come to the live workshop tomorrow at 7 p.m. Eastern. If you have a active income, you have a 9 to 5, or you have a few $1,000s liquid, as long as you don't have less than $1,500 to your name, come to tomorrow's live workshop, 7 p.m. Eastern. Click this link right here, this button, put your information in 2 times, reserve your seat, I'll text you the link, and I'll see you there. Thank you for all the information and teaching. No problem. Dude, how didn't I find you earlier? I appreciate all the info and all. No problem, man. I'm glad that you found me now. That's all I can ask for. I know nothing, but I know you're making money. I'm new and don't understand how to even start with this stuff. I have a free course, DJ, that you can watch. It's like 6 or 7 hours long. If you're a complete beginner, I definitely recommend watching that. I think it's better than most people's paid stuff, personally. I think it's better than most YouTube videos. And there's nothing in there that I'm selling you. So at the end of the day, it's just you get the game. I just hope that you do something with it. That's all I ask. What's the link? The link is in my bio for the free course. So if you guys don't have the funds right now, or if you guys don't have capital right now, just go watch the free course. You don't have to spend no money with me to get value from me. You don't have to spend anything with me. All I ask is that you just hit the follow button. And if you're on YouTube, hit the subscribe. Why is it free? The reason my group is free is because, number one, the information's already out there. So you're gonna either find it or not. I would rather you build trust with me and become a part of my community. I would rather you become someone that can find value from me and you have a trusted source that you can go to. So you don't have to keep going out there and trying to learn from all these different people who may not have the results that you're looking for. That's the first reason. The second reason is when you become more knowledgeable and then when you make more money at a later point in time, 9 times out of 10, obviously I own a business. You're gonna come spend money with me because I've already built trust. I've already given you so much for free that when it's time to pay, you're gonna know for a fact that the paid thing, if this is what's free, that's kind of what I'm proving, the point that I'm proving. You watch the 7-hour course, you can be like, man, if this is free, the paid must be insane. And go check the reviews on it. There's no reason we have so many 5-star reviews. So that's how it works. I give you an insane amount of value. And then when the time comes where you want to place money and learn more, then you come spend it. But only when you get to that point. And I'm not here to sell you. I'd rather just give it to you for free and you do what you want with it. Because I don't want to work with people who aren't serious anyways. That's a waste of time. This is why I do open and close enrollment for my Discord. We take the most serious people. We place them all in one community. They mesh together. They all learn at an expedited rate. They see results at an expedited rate because these are just the most serious people that I could find. And anyone who's not serious, we don't accept them because I don't need your money, which is why I'm doing the things that I do now because I don't need your money. Does that make sense? Does that make sense? Or am I tweaking? Or am I just talking? Trade futures or options? Options. Jab, jab, hook. Yes, sirski. You know? Lighting is hitting so crazy. What was 80K charged for? This is multiple courses. Victoria, what's up? Bro, the most I've paid for a mentorship is 30,000. Honestly, I need to spend more though. I think the next mentorship, there's one that I have my eye on. It's about 50,000. Just coming out 50 right now though. Oh, no. I don't feel like coming out of 50 right now. I think right now my brain is kind of on overload, you know? I don't think I have the capacity to go get, damn, that's an excuse, isn't it? I don't know, bro. Right now I'm not saying I'm cruising, but like 50K, I would have to dial the fuck in. You know what I mean? Like if I spend the 50K on the mentorship, I have to really lock the fuck in. Like right now, mentally, just like with my kids and like just living in Atlanta and just balancing everything, I'm just not in the right mindset right now to do it. It is what it is. I'm gonna do it though, for sure. By the first quarter of next year, it'll be done. It's just a simple fact that like right now, my brain, I can't do it. Especially, I don't think, this is something else that I've kind of, I'll be transparent. Is it okay if I just be vulnerable with y'all for a second? Like on some real shit, like just all seriousness. Is it okay if I just be vulnerable, like just be real with y'all? Let me know in the chat. Let me be real with y'all, okay? Most people don't talk about stuff like this, right? But, you know, it is what it is. You're gonna feel it at some point, right? You're going to get to a point, right, where you have exceeded everyone around you. You've exceeded their expectations. You have exceeded who they thought you would become. And when you get to this atmosphere, so here's the thing, right? So let's take a rocket ship for example, okay? When they launch rockets into space, at certain points in the air, there are certain parts of a rocket that falls off, right? And the reason it falls off is because it can't go to the next level. It can't go to the next part of the atmosphere. It can't break out into space. So there's multiple parts that fall off, okay? Until the main portion that needs to be in space, gets to where it needs to get to. And over the years, the hardest thing for me has been being that rocket ship, being that middle part that is pushing through atmosphere, that is constantly breaking new heights, breaking new levels, breaking new resistances, right? And watching all the people you thought were there for you fall off. Watch all the people that you thought loved you turn their back on you. Watch all the people who were the same people who was there by your side switch up on you. Talk crazy about you. And this has been like something I've dealt with for a while now, you know, because, you know, you got to think at 21, I had $100,000 liquid. And this was in my environment, right? I had exceeded, even that isn't even crazy. That's not a crazy goal to me, right? But I had exceeded every person's perspective of money. I had already beat the game in my city. People had already knew me. I had a business that was thriving. I have fucking influencers reaching out to me. My page, I became an influencer. And I exceeded all these expectations, and I just watched as people switched up on me. I watched how this person would start talking about me, or this person viewed me, or how family switched up on me, or how I just became a bank to most people. And I think that you guys will experience this if you really lock in and if this is something you really want. But here's the thing. You got to be careful of what you ask for, because when you ask for this life, you're not thinking about all the things that come with it. I've lost so many relationships with family and friends because they just could not understand me anymore. They couldn't understand that I shed the skin that I once was. They couldn't understand that. And I say all this to say I am beyond grateful for everything that I have and everything that I've achieved. When you get to a point in life, you're like trying to prove a point and things like that, or show people like, yeah, I did it. You know what I mean? Prove people wrong. You're trying to do all these things, right? And I think just more recently, I've gotten to the point where it's just like, man, like I never just thought of just I don't even know the best way to explain it. You know what I mean? Like I asked for all of this. I asked for everything that I have. I endured every part of everything that I needed to go through to become who I am. I asked for these things and I went through everything, and I'm here and I'm still pushing. I'm still going further, but it just seems like, you know what I'm saying? It just, it gets more overwhelming, more and more and more. And it's just hard to meet the expectations of other people. So more recently, the reason I bring all of this up is like, even when I'm in these streams or in these lives, like I don't want y'all to have this crazy bar and expectation of how you view me. I just want y'all to view me as just another normal person who just trying to show you what he did. So you can understand what I feel. So one day you can come back and you can go teach somebody else. Trading has so much to do with a person's identity that I've had to like really find myself again, not only with trading, but even trading live. That's a lot of pressure. I don't think, like, how many of you guys have came to like one of my live streams before where I traded live with y'all? Just comment me or yes down below. I don't think people realize how much pressure it is to trade live with people really watching you and to perform, right? Like, and to really perform, like be transparent and be okay with losing publicly. She said, I'm in here too much. No, you're not in here enough. And, I think just more recently, like, I think I've put more pressure on myself on trading because I do trade live and I do these things and I have a community, right? And granted, I love that my community makes a ton of money and they're doing a lot of great things and people are growing. But like that, honestly, that's why I had to like close my group and things like that. Like I had to remaster myself and this identity of myself of trying to be this way. I had to just remove that shit and it took time. You know what I'm saying? It took me isolating and working on the things that are most important to me. And if I love getting people results, then that just needs to be the focus. So I say all that to say, as my conclusion to all of this, is that on some real honest, like just a piece from me to you, when you're gonna get there, right? If you're willing to go through all the BS, because there's unspoken amounts of BS that you're gonna go through. And you gotta ask yourself, am I the type of person to endure these things and make it out? That's what it will always come down to that. There's times in my life, even now, where just because you make more money does not mean that the problems go away. The problems become bigger. And there's more pressure. There's all these people relying on you. You wanted to be that one person in your family that made it. And now you are. Now what? Now everybody relying on you. Now everybody want to ask you for money. Now everybody want to ask if we can go out to lunch and if we can talk. Now you got girls that from years ago hitting you up. Oh my God, I love what you're doing. Da 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 da. Trying to dub back when they ain't believe either. They didn't understand what you was doing. You got guys reaching back out to you, trying to flip the script, trying to, yeah, I cheated, but I'm a better man now because you elevated. So I say all this to say, to accept what comes with this journey, number one. But number two, always keep what you want for yourself at the forefront. Don't let the money change you. Don't let you know, how people switch up on you. Don't let none of that stuff change you. And because trading has so much to do with a person's identity, the best thing I could possibly tell you is remove the thought of having an identity to your trading. How do you do that? You prioritize your plan over an identity. You prioritize your plan over being right. You prioritize your plan over being profitable. You prioritize your plan over showing other people that you're profitable. You prioritize these things more than you look at the others. That's the only way. Yeah. So I'll leave you guys off with that. So I hope that you guys enjoyed this live. I hope you learned a lot. I hope you guys got a chance to see a different side of trading, you know? So with that being said, if you haven't already, hit the follow button or don't. It's completely up to you. But if you like anything in this at all, it doesn't hurt you, but it helps me a ton. So hit the follow button. Tomorrow at 7 p.m. Eastern, I'm going to be hosting a live trading workshop. I will be breaking down everything that's on my chart right now, gaps, my entries, exits, how to grow an account. I'll be breaking down all of this stuff live tomorrow, 7 p.m. Eastern, in a private Zoom call. This is for people who have an active income. This is for people who have a few $1,000s liquid, and or you're a person who's already lost money in trading and you're trying to get this shit down, you know? This is for people like that. If you are completely broke, you have less than $1,500 to your name in total, just watch all the free stuff that I have. I have a new YouTube video coming out this week. It's being edited right now by the team. You guys will be able to watch that. I plan on putting a ton of just free stuff out on my YouTube, so you guys can check it out there. Just my first and last name on YouTube, Dantes Akram. Okay. If you want the link to the Zoom call, okay, and you're the person that meets the criteria that I just said, what you want to go ahead and do is you want to click this yellow button right here if you're here on TikTok. So you're going to basically click that button, okay? You're going to put your information in. It's going to take you to another page. You got to put your information again so we can secure the seat. So that way my team, when it's time to send you the text message with the Zoom call or the Zoom link, you're able to do it. You're able to get the link, okay? This is the only way to get the link other than clicking the link in my bio. So you click right here, this yellow button, put your info in, put your info in again. You'll be able to reserve your seat. It's tomorrow, 7 p.m. Eastern. If you're in here and you don't have the funds right now, or you are in a more conservative space right now financially, I get it. I've been there. Trust me. If that is you, what I would suggest is to go click the link in my bio. There is a free 7-hour course that you can watch. All it asks for your email and your phone number so we can send it over to you. That's it. There's no card option. Go watch the 7-hour course. Take this weekend. Go watch it. Then when I come back Monday, tell me how you liked it. See if you learned anything. Okay? If you're here on YouTube, you guys can go ahead and hit the subscribe button if you guys like this, right? And I'll drop the link for you guys in there on YouTube. And you guys can sign up for the workshop as well. Okay? So, with that being said, that is pretty much it. I hope you guys enjoyed the live. Yeah, that's pretty much it. So, hopefully you guys enjoy it. Hopefully I'll see you in the next one. Love you guys dearly. And yeah, I'm out of here.